Boom! What's going on, guys? 360 Digital Closing Bill Daily Energy Market Summary, episode number 147, here on this gorgeous Wednesday, October 28th, 2020. As always, I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
Yeah, it's a beautiful day in the neighborhood, and it's still raining here.
Really? We've actually got some warm weather here. I actually was able to walk my dog with some shorts on, so that's actually partly what kept natural gas prices fairly steady. Midwest is still seeing a cold front, but we've kind of you get out Colorado West where it was really cold the last 3 days. We've actually warmed up a little bit, so we'll see that reflected in the natural gas price. We've also got some crazy stuff in the news desk. Hess reports earnings, just makes me chuckle off some of the quotes. EQT closes a deal with Chevron. Can't really tell you I told you so, even though I did. Crude oil inventories dropped today. Stu's got everything on the international news desk. But first, guys, just subscribe to our YouTube channel, Entercom Oil and Gas 360. Just type it up in the search bar. The best place to stay up to date on all of these daily shows and what's going on in the energy markets. When we move over to just the overall equities markets today, holy smokes, guys, hold on to your shorts. It was a red day. Record number of coronavirus cases come in at over 71,000, about 71,832 to be exact, going off the data compiled by Johns Hopkins. A bunch of states are going back into quote unquote stage 3 lockdown. I know Colorado, in Denver is one of those. Perma bull Jim Cramer has now turned perma bull or bear. He thinks we're actually going into lockdowns. He said that on CNBC this morning. He thinks lockdowns are going much like Chicago. So that obviously turns sentiment very south. All major indices down over 3 percentage points. Woof, woof, woof. Nasdaq was even down 3.2
That's a
percentage
triple
points.
woof.
It's a triple woof. And NASDAQ being down 3 percentage points is really interesting. Tomorrow and Wednesday, at least on the market site, start earnings in jest. So it'll be very interesting to see what those indices do amid all of this crazy stuff. I mean, hopefully we see some stimulus here in terms of the markets to prop us up, but I don't think that's going to happen as we creep closer and closer to the election. We move over to the crude oil side. You thought the equities markets were down today. Crude oil was down over 5 percentage points, really off the just the global fundamentals for crude oil not looking well. Storage levels both in the U.S. and globally have skyrocketed to the point where we're almost back where we are in April and running out of places to put all of this crude oil. Crude, as I mentioned, down over 5 percentage points, settling at 37.39. That front month contract currently trading 37.46. Back into the curve was down almost 4 percentage points, 40.03 for 12-month strip, almost below 39. We actually did see 39 for the back end of the curve, earlier on in the trading session. Unbelievable. Just those macro, we even had 4.3 million barrel build on the crude oil inventories, which we'll talk about. Only green number we saw was natural gas, $3.04 even on the nose. That's a 0.7% rise back into the curve, fairly flat, $3.08. So that full natural gas curve continues to stay wildly flat. E&P securities contract, XOP 39.88. That's 5 percentage points on the downside. Woof. OIH Oilfield Services, 90.96, 6.09 percentage points on the downsides. Woof, woof, woof. Not a good day for the equities markets. Big numbers on the downside, folks. Northern Oil and Gas down 9.5 percentage points. Sandridge down 10 percentage points. Tenseco Gas down 10 percentage. Peabody Energy, ticker symbol BTU, down 11.11 percentage points. Make a Wish, Matador Resources, biggest mover on the day, 12.99 percentage points on the downside. They released earnings today. Didn't really look, just continue to kind of mount up losses here. Now, what do you really expect on that front? When we look at the upside, 141 stocks, 6 of them, Stu, were in the green today. I'll read them all. American Resources Corporation, go America. We're up 0.25 percentage point. Hess Midstream, just more of a function of what happened on the earnings side. They were up about they were up 0.3 percentage points. Contango Oil and Gas up 0.3 percentage points. Blackstone Minerals up 0.5 percentage point. New Concept Energy up 0.6 percentage point. And our biggest mover on the day up a whopping, Stu, hold on to your shorts, 0.7 percentage points, $5.69. So not great movement on the upside if you were a bull. Perma bears, you guys are making shorts. I know Twitter's probably loving this on the EFT side. They're making money on the short, riding this thing down to the ground. Stu, what's on the international news desk today?
Hey, Michael, I got some stories that just feed right on into what you were talking about.
I don't know if I can handle it. I don't know if I can handle the more bad news.
No, this is not bad news. This is just news. Here we go. Africa Energy announces their second significant discovery in offshore Africa. Garrett Sodin. He is the Africa Energy's president and CEO. We like quotes today. We are thrilled to announce the second consecutive discovery in Block 11 and 12. Something significant about the good nuggets in this article. Block 11 and 12 are owned by Africa Energy, 49%. Total EMP is
Oh, s'il vous
45.
plaît, fresh. S'il vous plaît.
I can't talk like that. Okay. The French, 45%, and Qatar and Upstream International own that. So interesting in Africa. You and I had talked about.
Yeah, I mean, Africa's big natural gas player. I mean, you want to talk about trillions of recoverable gas that's available, whether it's offshore or onshore in Africa. Whoo! Someone's going to tap it at some point.
Oh, absolutely. Well done. Yep. But goodbye. Okay. COVID strikes again. You know, our old storage. You just mentioned some storage. COVID. Here we go. We got COVID striking. The EIA puts out COVID impacts crude oil tanker rates are likely to remain low until global petroleum demand increases. Holy smokes. You're sitting here talking about guessing whether or not tankers are going to be low. The nugget out of this bad dog is the floating storage increased this year from 66 million barrels in March 1 to 222 million barrels July 9. Floaters are amazing in the oil world here. It is driving people nuts.
That's such an unbelievable statistic. 200 million barrels of floating storage currently. I mean, that number right then, and that is the biggest bearish number that can come out of today, and partly why I think we saw a 5-6% drop in what's going on. There's nowhere to put any of this junk anymore.
Look at this. Look at that big bad hump. That's putting money on that hump. Okay.
Now you know why Saudi Aramco Trading's trying to increase their storage from 5 million to 6 million barrels. They see all of this oil out there. Boom, let's bring it in-house.
That's exactly right, Michael. We talked about that yesterday. Okay, hold on to your flight suit. COVID strikes again. This one is OPEC net export revenues are down the lowest in 17 years. Okay, I got a couple nuggets in this bad dog. The first one, here's a horrible, you're a chart guy, bad looking chart. It is the Brent spot, $71 per barrel in 2018. $64 a barrel in 2019, and EIA expects the average for 2020 to be $41. There's a big reason why you got some revenue declines. Here's the other one sneaking around the corner is Venezuela and Iraq. So you take a look at their combined number of barrels, it's driving OPEC nuts. Iran received a total of $9 billion export dollars from January to July, compared with, are you ready for this one, Michael? 20 billion same time period last year. They went from 20 billion, 9 billion. They are hurting for cash. So that goes why they are sending out and not listening to OPEC. So that was a busy day on stats on the news desk.
And just, the the bearish news that comes out of both those floating storage numbers and what we saw on the EIA front, which is a 4.3 million barrel total crude oil inventory build, but we also saw 3.6 million build in Cushing stocks, which is interesting. Speaking of the rest of that DOE inventories, U.S. field production increases a little bit. We're sitting at about a 10.7 million barrels. It's about 100,000 or about a million barrels got turned back on. That's from the last hurricane, but remember, we're a week behind. So there's 16% that's offline right now. We'll probably see the same number dip back down. I mean, our poor offshore oil field workers, I say that every single day, just in, out. Hurricane Zeta, it's obviously now it's actually increased a little bit. Looks like that destruction path is going to be a little more. We'll be sure to follow that. Recent gas prices came in $2.14. Refinery utilization, thank goodness, up a little bit, 74.6. That's really the only thing that's fairly interesting. Nice to see refinery utilization get up. We'd really like to see it above that 75% mark. What else do we have here? Oh, EQT CVX. Not to say we called it, but we did call this. They went ahead after Friday being rumored to acquire CNX to become probably, do about 5 BCF per quarter, become one of the largest, become clearly the largest natural gas producer up in the Marcellus. They go ahead and flip around and up their offer from 600 to 735 million and secure Chevron's Appalachian assets. And so this probably puts them out of the running for CNX. Obviously, this adds a huge amount of gross acreage, paying a little more than that 600 million that was reported a couple Fridays ago. But still, I think this is a better deal, in my opinion, than going out and merging with somebody like CNX. I just think there's a lot of headaches that go involved with that. You go ahead and just buy these assets. You don't have to lay anybody off. You can just continue to lay off your own people. What's funny is now there's 730 million at Chevron. New cash at Chevron. They're still making people reapply from their jobs. I'm not going to get over this fact. I will never let these executives at Chevron live the fact down that they're making their own employees reapply for their own jobs to see who stays and goes while selling $700 million worth of assets. Just boggles my mind. But we'll save that rant for another day. Finally, on the shale side, Hess reports earnings. You just got to love it, guys. Increase their growth. So top line, 200. Third quarter of 2020, $243 million net loss, about 80 cents per common share, comparative to $220 million. They lost money quarter 3 2019. Oh my goodness, how'd you do that? They lost even more this quarter, which makes sense because of COVID, but they were losing money a year ago from this point. And this is what's pretty funny. Here's the quote out of it. CEO John Hess: "We continue to execute our strategy. Not sure what it is, but they're executing definitely something. And they're achieving strong operation. This is it, strong operational performance while prioritizing the preservation of cash." I just read that right. While prioritizing the preservation of cash. Well, let's go look at the 10 Qs. Okay. Net cash provided by operating activities, 319 million. That's not bad for a quarter. Net cash used in investing activities, 661 million. Oh, double whoop there. Borrowings under the credit agreement, 220 million drawn off their credit agreement. Another 38 million off the San Mateo credit facility. All in all, net cash provided by financing activities, 343 million. Oh, I now know their strategy. It's to go drill banks. That's what it is. We finally now figured it out. It just kills me, guys. This is why you can't read the press release. You've got to go dive into the numbers. To give you guys an idea, net production. I mean, they have good Libya assets. I mean, you want to talk about some interesting numbers that they have. Oil and gas production, excluding their Libyan assets, was 321 barrels, which was up a little bit. Bakken production was up 21 percentage points, 198 million. I'm trying to just, looks like their crude oil option put contracts are in place for more than 80% of forecast net oil production, which gives them about 200 million in liquidity between now and the end of the year. I mean, I like that number. When you're making money off hedges, I like that. It just cracks me up. I just can't believe that quote came. I mean, and I will read it again. We continue to execute our strategy and achieve strong operational performance while prioritizing the preservation of cash. ... End of story. Stu, you got anything else on the news desk for us?
I do. The amazing Kreskin right here. This is the application for all Chevron executives to apply for their job again, right?
Is it a parking? It's a parking ticket. That makes perfect sense. But with that, guys, we're going to go and get out of here. Let you guys get back to work, finish everything. Thank you for checking out Daily Energy Market Summary, episode number 147 here on the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow for another episode.